No shortage of retail CEOs here at the World Economic Forum in Davos, Switzerland. We have a first-time Davos guest. That is Gap CEO Richard Dickson. Richard, I've seen you all over the world. New York Stock Exchange, Cannes,
That's right.
And now Davos. So what have you learned here on the ground?
Well, first of all, it's a spectacular place to be.
It's not bad, right?
It's not bad at all. And being in the world stage of cultural conversation has been a really important place to be as a curious leader, as well as obviously leading a company of our size. So it's a special place and a special time in our company to be here.
I know you've, over a year into the top job, done a lot of great work there, but how does Gap fit into the international scene? You've been US focused, but what is the presence of this company and where do you stand in this grand global stage?
Yeah, well, first off, we have certainly more than just the Gap brand. Gap Inc. has Old Navy, which is our largest brand, well known throughout the world. Gap, of course, Athleta and Banana Republic. These are storied brands, decades young, if you will, with international presence. Europe, Latin America, Japan is a very big market for us, Asia. These are globally recognized brands and diverse in their footprint in the context of what they represent in each region, but ultimately a strong international presence, but a North American-based business.
I found an old clip of myself, Richard, when I was an analyst from 2012, and I said Gap was dead. And I thought to myself today, I look like a real ass today. I mean, but it was right for a certain period of time, but not under your leadership.
Yeah.
Like, is the company officially saved? I mean, it's just Gap back and we could stop thinking about the struggles of Gap from yesteryear?
Yeah, well, first off, I think we're all Gap fans. And I think that's what's most exciting is these are brands where people connect to. And they've connected through peaks and pits and various different moments in time where we were less relevant. And the company, I believe, overall, through that, has been incredibly resilient. So this is a group of assets that, as we continue to drive our strategic priorities, putting more discipline into financial and operational rigor, we've stabilized the top line, we've expanded the margin component of our P&L pretty significantly, we've controlled inventory, we've done less promotions, we've controlled the SG&A, and now our operating margins are really getting back to some historical references.
Thanks for taking my sales away online.
Well, look, there's still great offers, it's just less of them, and that also is part of our strategy. So the brand now can move and has been moving into reinvigoration. And that's really the playbook that we're putting into place. What is our reason for being as a purpose? Inspired by our consumer insights and trends, creating great product at great value, editing and telling better storytelling processes out of our merchandising and merchandising mix, and then executing with excellence. I mean, Brian, you know, retail is detail. We've got a lot of retail stores, and so executional excellence is a really core component of our strategic point of view.
Do you still need all these stores?
We're evaluating our retail footprint. We continue to always evaluate our retail footprint. There's probably more doors to shut, and there's more doors to open. So absolutely, over time, we believe that there's going to be a moment where we're going to be ready for new pipeline growth. We have tests in each one of our fleets right now on new concepts. We're testing them, we're experiencing the consumer's reaction to them, as well as the edit in our product assortment. We're feeling very confident, but it's a continuous improvement model. We've got to continue to do what we say we're going to do, stick to our strategic priorities, continue to meet the metrics that we have been and more. And then in the mid to long term, we're very excited about our future.
I would say last year you start to work your marketing mastery, and to me, you may disagree with me, but that was the first wave of change that I saw from the company, from the outside looking in. But then the apparel started to change at Gap and Old Navy. What is this year? Like what changes should investors expect? Like how is the apparel going to look different? What trends are you leaning into? Not just with Gap, but also Old Navy and even Athleta.
Yeah. Look, turnarounds like this or transformations take time. There's also a sequential order to it. There's a short, there's a mid, and there's a long-term proposition. We are still in the short term of fixing the fundamentals.
Still?
Yes, still. But while we're fixing the fundamentals, we're performing while we transform.
What were these prior teams doing for 10 years, Richard?
They were doing what they were doing with passion and pride.
Good. Okay.
Right? And I say that with true commitment to strategically well-intended leadership with flawed execution. And so the concentration that we are putting forth around doing what we say we're going to do, continuous improvement, fixing the fundamentals, that's going to then fuel the reinvigoration of our brands. You see it, some of the marketing that's coming out is starting to recognize new consumers, and the ones who love us more. Continuous improvement in that model getting better product, better design. Zach Posen joining us to infuse real creative energy, a design point of view, and ultimately a cultural renaissance. This is a storied company with legacy, leadership, and great talent. And now we're coming into a place where, by this new energetic culture, with a strategic roadmap that we're following, with some wins that we're starting to feel, the wind is now behind us. Still a lot of work to do, but stay tuned. There's a lot of good things to come.
So I want to tick through some of the retail CEOs that I had. We've talked to here at Davos. Laura Alber, CEO Williams-Sonoma. She surprised me in how much sourcing she has moved out of China, given all the tariff talk we're seeing. I mean, that really caught me by surprise, making things in the U.S. Patrice Louvet over at Ralph Lauren, I think he told me only 5% of his sourcing is in China. Again, it surprised me. You surprised me a little bit. How much sourcing is still left in China, and how concerned are you about potential tariffs?
Yeah. First of all, two amazing CEOs. Laura's done a spectacular job with Williams-Sonoma. Patrice has done a spectacular job with Ralph Lauren. And obviously, we're sort of trailing in the context of my history and leadership with a storied company like ours. Our team has done an incredible job over the last several years diversifying our global manufacturing footprint. Less than 10% of our product is coming from China. We've got Southeast Asia, Central America, Europe, India. We've got various different places and ways that we've been developing over time, and we continue to develop even new markets for product development. So tariffs, they'll come, but ultimately it's our job to figure out the value proposition and make sure that we present our consumers with the best product at the best price with the best execution.
Are you spending outsized time at the board level even thinking about tariffs?
Our board is concentrating on our strategic priorities. I mean, tariffs are a dynamic and arguably one that we've experienced before. This is, again, a legendary company, 55 years young. There's a lot of events that have happened over that course of time, and the company's proven resilient through all of the trials and tribulations. We are going into another chapter of challenges, but again, as we stick to our strategic priorities, do what we say we're going to do, we're going to figure all the various different policies out with this new administration. We're optimistic about the future of our brands, and we're looking forward to working with the administration and dealing with all the various challenges ahead.
Do you have to, I had a conversation with the CEO of Suntory. He told me they were stockpiling whiskey in Europe because of tariffs. He has 1 year of whiskey in Europe. Is that a strategy you could employ? Will you stockpile merchandise?
We are really making sure that we manage our inventory really carefully. There are always timing issues with inventory that may have different fluctuations, but ultimately, and I think as you see our gross margin expansion over time, the discipline that we put into place, running a much more financial and operational rigorous model, is a big component of that is inventory management. And so we are running our business as we need to with the right inventory and the right time, and it's a fundamental fix that, again, with the metrics that we put on the scoreboard, is a discipline that I'm feeling much more confident about.
Before I let you go, when I first caught up, when you first took this job over a year ago, it wasn't the right time to ask this question, but like now that you've settled in, should all these brands still be owned under this umbrella of Gap? Does that model still make sense? And it's top of mind for me, not only for your company. I'm talking to Honeywell CEO. His company is splitting up to drive shareholder value. Have you thought about this at all?
Of course, we think about it and we've analyzed it, and we believe the portfolio that we have in place is a powerful portfolio. We've spent a lot of time differentiating each one of our brands, as we've talked about before, and now you go online and you start to feel brand storytelling that's distinct from each other. We're building a lot of capability and insights into making sure that we leverage our portfolio, study our consumer from the various brands, and offer the most distinct and unique product by brand. The platform that we have in the context of our portfolio can be leveraged in really exciting ways. Our global supply chain is one of the largest in the fashion industries. The value proposition that we get when we go buy fabric, when we negotiate, real estate, we're the largest apparel specialty player in the country. We've got great pride in that heritage, but we also have a strong negotiating point of view as a large leaseholder.
Sounds like you couldn't even unwind it. I mean, it would be very difficult.
It's very difficult to revitalize portfolio brands that you're seeing the progress that we're making. I believe by strengthening our platform and continuing to do what we say we're going to do in the middle of the P&L and now growing our brands on the top line, the platform is going to be leveraged, and there's going to be a lot of exciting ways that we share with our shareholders, various different ways to optimize and create shareholder value.
That's all banana you're wearing, right?
It is all banana head to toe, and a little bit of Gap and Old Navy in places that you can't see.
All right, well, don't make me blush there, Richard Dickson. We're just going to leave it there. CEO of Gap, always nice to see you, man.
Thanks,
I
Fred.
appreciate you always making time for us.
Thank you so much.